Welcome to another deep dive. Looks like we're going deep on money and banking this time.
Yeah, should be pretty interesting.
Way beyond balancing your checkbook, though.
Oh, yeah, for sure.
We've got lectures from an economics professor
Okay.
on the history and mechanics of money.
Sounds good.
So we're going to cover everything
Okay.
from how money is created to
Yeah.
the gold standard. It's always a fun one.
It's fascinating.
Yeah.
How we often take money for granted,
It's true.
But
Yeah.
without a system for
Well.
exchanging goods and services,
Right.
I mean, our economies
Uh-huh.
would be incredibly inefficient.
Oh.
Imagine bartering for everything,
Oh my gosh.
right?
It's so true. And it reminds me of that famous Adam Smith quote
Oh, yeah.
about the butcher, the brewer, and the baker.
Right, right.
Like, they're not giving you dinner
Yeah.
out of the goodness of their hearts.
No.
They're doing it because...
They're getting something in return.
Exactly.
Self-interest. Right.
And the need for exchange.
Yeah.
And that's where money comes in
Yes.
as a solution.
A solution to that problem.
Yeah. Think about how clunky bartering would be.
Oh, gosh. Yeah.
You might have a surplus of something you
Mhm.
produce,
Right.
but finding someone
Yeah.
who needs that specific thing
Right.
and has something you want in return,
Right.
that's a huge challenge.
Like a nightmare.
Economists call that the double coincidence of wants problem.
Okay.
It's a mouthful,
That's a mouthful.
but it's a very real problem.
It is. And like trying to trade a cow for a haircut?
Exactly.
Like, no,
Not going to work.
that's not a smooth transaction.
No.
I can see why a more efficient system was necessary.
Absolutely.
One of the sources mentions a homesteader.
Oh, really?
Yeah.
Okay.
In Kansas, back in the 19th century,
Wow.
who was hesitant to accept banknotes
Oh, interesting.
from an out-of-state bank.
Really?
Yeah.
Wow.
Okay.
It just shows you how important trust and familiarity are
It really...
when it comes to money.
Yeah. That anecdote
Yeah.
highlights the evolution of money from simple barter
Right.
to more complex systems.
Okay.
It started with direct exchange,
Okay.
but as societies grew,
Uh,
people began using commodity money.
the commodity.
Yeah,
whatever.
things with intrinsic value like salt shells
Okay.
or even
Oh, yeah.
those giant stone discs
I love those.
they used on the island of Yap.
The Yap stones.
The Yap stones.
Those have always fascinated me.
They're amazing.
They were huge and difficult to move,
Right.
but they represented wealth
Exactly.
and could be exchanged without physically trading hands.
It's amazing.
Talk about a primitive ledger system.
Right. It speaks to the power of shared belief
Yes,
in a society.
it really does.
But as trade expanded,
Huh.
commodity money wasn't always practical.
I can imagine.
And that's where coins came in.
They were standardized government-backed units
Okay.
with a specific metal content,
Mm-hmm.
making trade much easier.
Much easier than lugging around a giant stone.
Oh, yeah, for sure.
Might bet.
Much easier.
But I guess governments being governments,
Oh, yeah.
they figured out ways to game the system.
Of course they did.
Right. They'd shave a tiny bit of metal.
Oh, really?
Yeah.
Wow.
Off each coin before circulating it.
That's sneaky.
The source material called this seigneurage.
Seigneurage.
Yeah.
Okay.
It seems small, but over thousands of coins?
Yeah,
It really adds up.
it does indeed.
Yeah.
And it highlights that tension
Okay.
between the intrinsic value of money
Uh-huh.
and the trust we place
Right.
in the issuing authority.
Right.
And this tension becomes even more pronounced
Okay.
with the rise of paper money.
Okay.
Initially, this paper was backed by precious metals,
Okay.
held in reserve.
Uh-huh.
Imagine it like those warehouse receipts
Okay.
issued by London goldsmiths.
Centuries ago.
Okay, I'm with you.
But these goldsmiths,
Yeah.
they were clever.
Uh-oh.
They
Oh,
realized
they do.
they could issue more receipts
Oh, really?
than the actual gold they had.
Interesting.
Because people rarely withdrew all their gold at once.
That makes sense.
Right.
So it's kind of like our modern banking system,
Precisely.
where banks only keep a portion of deposits on hand
Yes.
and lend out the rest.
It's called fractional reserve banking.
Fractional reserve banking.
Yeah.
Okay.
But this system depends heavily on trust.
Right, because if everyone went to get their money
Exactly.
at the same time,
If everyone suddenly decided to withdraw,
right.
the bank wouldn't have enough to cover it.
Yeah, that makes sense.
And eventually, this led to the development of fiat money,
Fiat money.
paper currency that's declared valuable
Okay.
by the government, not
Mhm.
because it's inherently linked to a precious metal.
So that dollar bill in your wallet,
Exactly.
it says legal tender.
Right on it.
That means the government's telling you it's valuable.
Because they say so.
And it works because we all agree to play by those rules.
That shared agreement is crucial
Right.
And it brings us to the gold standard,
Here we go.
which has been a subject of intense debate
Always.
for centuries.
Yeah.
It was a system where countries pegged the value
Uh-huh.
of their currency to a fixed amount of gold
Okay.
with the aim of maintaining stability
Okay.
and controlling inflation.
So like each dollar was like a golden ticket
You got it.
that you could exchange for a certain amount of gold.
That's a great way to put it.
Right.
Yeah.
But I imagine there were some downsides too.
Oh, there are definitely downsides.
The source material mentioned that the supply of gold was limited
Right.
and could be affected by random discoveries,
Exactly.
which could disrupt economies.
Absolutely.
So if they found a bunch more gold all of a sudden,
Right.
then the value of the dollar would drop
That's right.
because there's more gold to back it up.
Ex-
So it goes down.
And that rigidity
Okay.
meant that the gold standard couldn't easily handle
Right.
major economic shocks
Okay.
like wars
Mm.
or those unpredictable gold discoveries.
Yeah.
This ultimately
Yeah.
led most countries to abandon it.
So was it a case of trusting the Fed
It's a great question.
or whatever central banking system a country had
Yeah.
more than trusting the global gold markets?
It's a debate that continues to this day.
Wow. Right.
Some people,
Okay.
like Steve Forbes and Ron Paul,
Okay.
advocate for a return to the gold standard,
Okay.
arguing that it would limit government overreach
Okay.
and control inflation.
Uh-huh.
Others believe it would be too restrictive
Okay.
and wouldn't allow governments to respond effectively
Right.
to economic crises.
That makes sense.
So what are your initial thoughts?
I'm leaning towards the flexibility of a central bank system,
Okay.
but I definitely see the appeal of
Okay.
having a more tangible and seemingly stable backing for currency.
It's a complex issue
It is.
with valid arguments on both sides.
Yeah.
But let's shift gears now
Okay.
and delve into how this tension
Okay.
between centralized
Ah.
and decentralized control
Yeah.
played out in early U.S. history.
Okay.
The story of money in America
Yeah.
is really a wild ride.
I bet it is.
Buckle up.
Right.
So from the very beginning,
Okay.
there was this clash of visions for the nation.
Okay.
Alexander Hamilton.
Yeah. The $10 bill guy?
The guy on the $10 bill.
Right.
He proposed the first Bank of the United States
Okay.
back in 1791.
Okay.
It caused quite a stir.
Was it because people didn't want a central authority figure controlling their money?
Exactly.
Okay.
It symbolized a power struggle.
Okay.
On one side,
Okay.
you had those who favored a more agrarian society,
Okay.
self-sufficient,
Yeah.
less reliant on financial systems.
Okay.
On the other side,
Okay. Were those pushing for a commercially driven nation, embracing trade, and a more centralized financial structure?
So the first bank kind of represented
Yes.
this shift towards a stronger federal role
Exactly.
in the economy.
And despite
Yeah.
helping stabilize the young nation's finances,
Okay.
many saw it as a step toward
But really?
the tyranny of the British monarchy.
Oh, wow.
They just fought to overthrow.
Right. Yeah, of course.
There's this great quote
Uh-huh.
from James Jackson,
Okay.
a senator at the time,
Okay.
who feared the creation of perpetual institutions,
Interesting.
a sentiment
Yeah.
that still resonates
Yeah.
with some people today.
It's interesting how those ideas kind of keep coming back around.
They do.
So even back then, there was a suspicion
Absolutely.
of centralized power,
Yeah.
especially when it came to money.
Especially when it came to money.
Did the first bank eventually shut down?
It did.
Okay. The charter wasn't renewed in 1811,
Okay.
but the idea of a national bank didn't go away.
It always comes back.
It does.
Right.
The Second Bank of the United States
Right.
was chartered in 1816,
Okay.
but it met a similar fate,
Okay.
largely due to Andrew Jackson's opposition.
Oh, really?
Yeah.
What did he not like about it?
He saw the bank as corrupt,
Okay.
favoring the wealthy elite
Okay.
over the common man.
Okay.
It was a dramatic showdown
Wow.
that ultimately
Right.
led to the bank's demise.
Sounds like a real-life political thriller.
It does.
Yeah.
It really emphasizes
Yeah.
how deeply ingrained this distrust is of
Yeah.
centralized banking
Right.
throughout American history.
Yeah. And it wasn't until the Civil War
Right.
that the federal government really consolidated its control
That's right.
over the nation's monetary system.
They had to finance the war effort,
Right.
force their hand.
Yeah, that makes sense.
So they created the first U.S. dollar
Okay.
as we know it
Wow.
and established a national banking system.
Interesting.
And this laid the groundwork for the system we have today.
So it took a massive crisis,
It seems like it always does.
right, to
Yeah.
finally bring about a unified national currency.
Right.
It wasn't only governments, though,
Right.
trying to figure this whole money thing out.
No.
The source material mentions
Yeah.
some intriguing examples of people
Yeah.
creating their own currencies.
It's fascinating.
Like they were just coming up with this stuff themselves.
Yeah,
It's amazing how innovative people can be,
it is.
especially in times of need.
Especially in times of need.
One great example is the town of
Virgil. Okay.
in Austria.
Okay.
During the Great Depression,
Wow.
they issued labor certificates
Labor tickets.
as a way to boost their local economy.
Interesting.
And it actually worked.
Wow. So they created their own money
Yeah,
out of thin air.
pretty much.
Yeah. And it actually helped.
Yeah,
That's incredible. How did it work?
I'm curious too.
So these certificates
Oh.
circulated within the community
Okay.
and were used to pay for goods and services.
Okay.
So by creating this localized system,
Uh-huh.
they were able to stimulate economic activity
Okay.
without causing inflation.
Wow.
It was a true testament to the power of community-driven initiatives,
That's pretty amazing.
especially during a time
Yeah.
of widespread hardship.
So if it worked in a small town in Austria,
Right.
could similar systems work elsewhere?
That's the question, isn't it?
I mean, we use gift cards and store credit all the time,
That's true.
which are kind of like localized currencies in a way.
You've hit on a key point.
So have I.
Yeah.
Okay.
The source material gives other interesting examples.
Cool, really? Like what?
There's the story of cigarette money
Okay.
in a WWII POW camp.
Wow, okay.
Even non-smokers use them as currency
Real?
because they held value within that specific context.
Interesting.
Then there's dilly dollars.
Dilly dollars.
Okay. In Great Barrington, Massachusetts,
Okay.
it was a microloan scheme
Okay.
disguised as local currency.
Wow.
It's amazing to see how creative people get.
It really makes you think about
It does.
the nature of money itself.
Yeah.
Like what gives something value?
Right.
Is it scarcity,
Yeah.
utility,
Uh-huh.
or simply shared belief?
That's the core of it.
Okay.
And it ties into our discussion about trust
Yeah.
earlier money.
Okay.
Whether it's a dollar bill, a gold coin,
Yeah.
or even those yapstones,
The Appstones.
only works if people believe it will be accepted by others.
Right.
This trust is essential,
Yeah.
especially when we talk about collective savings
Yeah.
and community-driven financial systems.
Okay, so we've talked about alternative currencies.
Right.
But what about the power of collective savings
Okay.
in more traditional systems? The source material used a parable
Okay.
about 10 families
Good.
who all want bicycles but can't afford them individually.
Right.
So they decide to pool their savings.
Okay.
So one family gets a bicycle each year.
It's a powerful illustration
Yeah.
of how much faster a community can achieve its goals
Right.
when they work together.
Together. Instead of
Yeah.
waiting years to save individually,
Yeah.
they create a system where everyone benefits sooner.
Exactly.
And this highlights the concept
Yeah.
of rotating savings and credit associations.
RSSEAs.
RSSCAs. Okay.
Yes.
These are informal groups,
Right.
common in developing countries,
Sure.
where members contribute regularly
Yeah.
to a pool of money.
Right.
And each member gets their turn receiving the lump sum,
Exactly.
which they can use for various purposes.
Yes.
So it's like a community lending circle
It is.
built on trust
Yeah.
and shared responsibility.
You're right. It demonstrates
Yeah.
that financial innovation.
Can happen
Yeah.
at the grassroots level.
At the grassroots level, that's really cool.
But the success of these systems
Yeah.
hinges on trust and accountability.
Right. Because you got to make sure
Cool.
people are going to actually pay in.
Exactly.
Otherwise, the whole thing falls apart.
There have to be mechanisms in place
Right.
to ensure everyone keeps their end of the bargain.
Their end of the bargain.
Yeah, otherwise the whole system collapses.
That's right.
And this brings us to another inspiring example.
Okay.
The Grameen Bank.
Oh, yeah. The micro-lending institution.
Yeah.
I remember reading about that.
Yeah.
They do amazing work
They do incredible work.
in empowering people out of poverty.
It's truly remarkable.
Yeah.
Muhammad Yunus,
Okay.
the founder,
Yeah.
won the Nobel Peace Prize
Wow.
for his work.
That's amazing.
The Grameen Bank provides small loans,
Well,
often to women who
okay.
form groups
Okay.
to support each other.
Okay. And ensure repayment.
Okay, so there's like a social aspect to it too.
Exactly. This social pressure
Yeah,
acts as a strong incentive
Yep.
to stay on track.
right.
And it has been incredibly successful
Wow.
in helping people build businesses
Uh,
and improve their lives.
it's a powerful example of how financial systems
Yeah.
can be used
Absolutely.
for social good.
Yeah, it goes beyond profit.
Right.
And focuses on creating opportunities
Hmm.
and empowering individuals.
We've talked a lot about the positive aspects of money.
We have.
What about the risks
Right.
and the potential downsides?
You're right. We need to address the elephant in the room.
What's that?
The inflation.
Inflation. Remember,
Yeah.
it's that insidious force
Okay.
that erodes the value of money over time.
Like a hidden tax.
It is.
That can really hurt,
Yeah.
especially for people living on fixed incomes.
Exactly.
One of the sources had this striking image.
Of someone lighting a cigar with $100 bill
Oh, wow.
to illustrate the absurdity of hyperinflation.
Wow.
It's a funny image, but the reality is terrifying.
It is terrifying.
Hyperinflation is like the worst-case scenario.
It is the worst-case scenario.
We're talking about prices skyrocketing
Yeah.
by more than 50% each month.
Each month.
The source material recounts
Yeah.
the devastating case of Germany in the early 1920s.
Right.
Imagine prices quadrupling every month.
It was chaos.
People were rushing out to spend their money
Yeah.
before it became worthless.
Exactly.
I can't even imagine trying to plan for the future
No.
in that kind of environment.
Devastating.
What causes hyperinflation to happen?
That's a great question.
Is it just governments printing too much money?
You're on the right track.
Okay.
Milton Friedman
Okay.
famously said,
Yeah.
inflation is always and everywhere a
Right.
monetary phenomenon.
Okay.
Essentially, if the money supply grows much faster than the economy itself,
Oh.
it leads to price increases.
Okay.
This is often driven by governments
Okay.
trying to spend their way out of debt
Yeah.
or crises,
Okay.
but it can spiral out of control
Yeah, I bet.
very quickly,
Right.
wiping out savings
Yeah.
and devastating economies.
So could it happen here?
It's a valid concern.
In the U.S.,
Yeah.
we do have a pretty substantial national debt.
The temptation
Yeah.
to inflate our way out of debt
Yeah.
is always there.
Right.
However,
Okay.
the Federal Reserve,
Yeah.
our central bank,
Okay.
has generally been pretty good
Okay.
at keeping inflation in check.
Okay. That's somewhat reassuring,
It is.
but it's certainly something to keep in mind
Absolutely.
as we discuss the current state of the U.S. economy.
For sure.
But before we dive into the current situation,
Okay.
let's take a step back
Okay.
and revisit this idea
Okay.
of fractional reserve banking
Okay.
and how it plays into the creation of money
Right.
in our modern system.
It's still a bit mind-boggling to me.
Yeah, it is.
We've come a long way from digging up gold and silver.
It really is amazing how much the financial system has evolved.
It really is remarkable.
Well, how does it all work?
Remember those London goldsmiths
Yeah.
we talked about?
Yeah.
They were the early prototypes
Okay.
of modern banking.
Okay.
Today,
Yeah.
banks operate on a similar principle.
Okay.
They keep a fraction of deposits on hand
Okay.
as reserves
Yeah.
and lend out the rest.
Right.
This lending and relending process
Okay.
is what creates new money.
Creates new money.
It's like an economic ecosystem
Okay.
where money is constantly circulating
Okay.
and multiplying.
So when I deposit money into my bank account,
Yes.
it doesn't just sit there.
No, it doesn't.
It gets loaned out
It gets loaned out
to other people and businesses
into other people and businesses.
who then spend it.
Right.
And that money gets deposited again,
Yeah.
creating even more money.
Exactly. It's a fascinating cycle.
And the Fed plays a key role
The Fed does.
in managing this whole process.
They control the money supply
Okay.
by setting reserve requirements
Yeah.
for banks
Okay.
and influencing interest rates.
So the Fed is kind of like a conductor,
That's a great analogy.
making sure the
Yeah.
whole financial orchestra is playing in harmony.
Their goal is to promote stable prices,
Okay.
full employment,
Uh-huh.
and overall economic growth.
Okay.
They try to keep the economy humming along smoothly.
Okay.
But like any complex system,
Right.
it's not always perfect.
Of course not.
We've seen periods of high inflation,
Uh-huh.
recessions,
Yeah.
and financial crises
Yeah.
in our history.
It seems like managing an economy
It is.
is a delicate balancing act.
It is a delicate balancing act.
It makes you wonder
Yeah.
if there are alternative systems
Right.
that could work better
Uh-huh.
or be more resilient to shocks.
You've raised a really interesting point.
Oh,
While the source material
Oh,
doesn't go into specific alternatives,
okay.
it does underscore the crucial role
Mm-hmm.
of trust,
Of trust.
whether it's gold dollars
Hey,
or even those yapstones.
those yapstones keep coming back.
They do.
That's funny.
People need to have faith
Right.
in the value of what they're exchanging.
Right.
That makes me think
Okay.
about the future of money.
Yeah. What is the future of money?
Will we be using digital currencies?
Okay.
Will decentralized finance take over?
Right.
Or is something else entirely on the horizon?
That's a good question.
It's an exciting time to be considering these questions.
It really is.
We're seeing a surge of innovation in finance,
Yeah.
driven by technology and evolving social needs.
It's really interesting. Yeah, it really feels like we're at a crossroads.
It does.
With all this talk about cryptocurrencies and digital wallets
Right.
and the rise of fintech. It's hard to know what the future holds for money.
You're spot on.
Yeah.
We're witnessing a wave of disruption
Okay.
that's challenging our very ideas of money and finance.
Wow.
Take cryptocurrencies, for example.
Crypto.
They offer a decentralized alternative
Okay.
to government-issued currencies.
Right.
And some argue they could be more transparent
Okay.
and secure.
But haven't cryptocurrencies
They have.
also been incredibly volatile?
They have.
A lot of people still find them
Oh, yeah.
confusing and risky.
That's true.
Yeah.
Their value has fluctuated wildly,
Right.
and there are definitely concerns about regulation and security,
Right.
but the technology behind them,
Okay.
blockchain,
Blockchain.
is truly revolutionary.
Okay.
It has the potential to transform not just finance, but countless other industries as well.
Okay. I mean, it's fascinating.
It is.
But I have to admit, it can feel a bit overwhelming.
It can be a lot.
As someone who isn't an economist, where do I even begin to wrap my head around all this?
I hear that a lot.
Yeah.
It's easy to get lost in the hype and complexity.
Right.
The key is to focus on the fundamentals.
The fundamentals.
Yeah.
Okay.
Once you understand the basic principles
Okay.
of money banking and finance,
Okay.
you'll be better equipped to
Yeah.
navigate this evolving landscape
Right.
and make informed decisions
Okay.
about your own finances.
So it's not about chasing the latest trends
No,
or trying to get rich quick?
not at all.
Okay.
It's about building
Okay.
a solid financial foundation
Okay.
based on sound principles.
Sound principle.
That means saving wisely,
Okay.
investing for the long term, and managing debt responsibly.
That sounds like pretty solid advice,
It is.
no matter what the future of money holds.
Exactly.
But it also sounds like it requires
It does.
staying informed
Yeah.
and adaptable.
Absolutely.
This deep dive has given me a lot to consider. Good.
And that's precisely the point.
Okay.
The world of money and banking is constantly evolving
Right.
by engaging with the material,
Okay.
asking questions,
Uh-huh.
and being open to different perspectives.
Right.
You're empowering yourself
Okay.
to make informed choices
Yeah.
and shape your own financial future.
Exactly. And who knows?
Yeah.
Maybe this deep dive
Oh.
will inspire some listeners
That would be great.
to come up with their own innovative solutions
Yeah.
to the financial challenges we face.
I hope so.
The story of money is far from over.
It certainly isn't. And as we've seen throughout history,
Yeah.
it's a story filled with both opportunities
Right.
and pitfalls.
Right.
By understanding the mechanics of money,
Okay.
the role of trust, and the impact of individual and collective choices,
Okay.
we can work towards creating a more equitable
Okay.
and sustainable
Yeah.
financial system for everyone.
Well said.
Thank you.
So as we wrap up this deep dive
Okay.
into the intricate world of money and banking,
Yeah.
we want to leave you with this thought.
Okay.
What role will you play
Right.
in shaping the future of money?
It's a question worth pondering.
It is.
Will you be an informed participant,
Okay.
a cautious observer, or maybe even a bold innovator?
Ooh.
The choice is yours.
Thanks for joining us on this journey,
Thanks for having me.
and keep exploring.
Yes.
There's a whole world of fascinating knowledge out there
Because
waiting to be discovered.